Hello and welcome. So, today we're going to tackle something that, let's be honest, can feel a little intense. It's the classic one sentence textbook definition of accounting. But here's the plan, we're going to unlock it like a puzzle, piece by piece. And by the end of this, I promise it'll actually make perfect sense. And there it is, the beast. I know, it's a total mouthful, right? But think of it as a one sentence puzzle that we're about to solve together. We're going to dig into everything, from why on earth it's called an art, all the way to what it means to interpret the results. Trust me, by the time we're done, every single one of these words is going to click right into place. So here's how we're going to do this. We're taking this massive sentence, pulling it apart into its core ideas, and just looking at each one at a time. The goal isn't to memorize it, it's to get the parts. Because if you get the parts, you'll understand the whole meaning of accounting without even trying. Okay, so right out of the gate, the definition hits us with a kind of weird word, art. Why art? Isn't this all about numbers? Well, think about it like this. An artist needs tools, a pencil, a brush, to create something. An accountant needs tools too, things like balance sheets and trial balances. They use skill and established techniques to take raw data and create a clear financial picture. So in that way, yeah, it's totally an art. So if accounting is an art, then what does the accountant, the artist, actually do? Well, the very next part of our puzzle gives us the answer. It's the three key actions, the verbs, that are the absolute heart of the entire process. And here they are. These three words are the backbone of everything: recording, classifying, and summarizing. And the order is super important. Each step builds right on top of the last one. So let's break down what each of these really means. Okay, so first up is recording. That's pretty straightforward. It's just writing down every single transaction as it happens. But you can imagine that list gets chaotic fast. That's where classifying becomes a lifesaver. You might have cash sales, credit sales, a payment from ROM, a payment to Sham. It's a mess. Classifying means you sort it all out. All of ROM stuff goes in one bucket, all of Sham's in another. It's literally how you bring order to the financial chaos. So once everything is recorded and nicely classified, you summarize. This is where you take all that organized data and pull it together to see the big picture. Think of it like this. Summarizing creates the super important reports like the profit and loss statement, did we make money, and the balance sheet, what do we own and what do we owe. It's how you go from a giant list of transactions to a clear, at-a-glance view of how the company is really doing. All right, so we've got the process down: record, classify, summarize. But how do you do it? Are there any rules? Oh, you bet there are. The next piece of our puzzle lays out the key principles that govern the whole game. The definition says all this has to be done in a significant manner. Now, that doesn't just mean you need to be neat and tidy. It actually points to a really big idea in accounting called the materiality concept. Basically, it means that you have to report any piece of information that's big enough that it could actually change the decision of someone reading the report. It's a fundamental rule to make sure nothing important gets hidden. The next rule is that everything has to be in terms of money. And this is absolutely huge because it highlights one of accounting's biggest limitations. It can only record things that you can put a dollar sign on. So a company can record $1 million in assets, no problem. But it has no way to record that employee morale is in the tank or that a key manager is having a terrible day. And that means some of the most important parts of a business, the human parts, are completely invisible on the financial statements. Okay, so we have the process and we have the rules. But what are we actually recording and classifying? What's the raw material here? Well, the definition gives us that too: transactions and events. The first raw material is a transaction. It's super simple. It's just the exchange, the act of giving and receiving. A customer buys a product, you pay an employee. That's a transaction. It's that initial moment of action. And right on the heels of a transaction, you have an event. The event is the result, the outcome of that transaction. So if the transaction is buying a new machine, the event is that your cash goes down, but your assets go up. See the difference? One's the action, the other's the consequence. And just to hammer the point home, the definition adds that these transactions and events have to be of financial character. This links right back to that in terms of money rule we just talked about. The subject has to have a monetary value to make it into the books. A manager giving a pep talk might be an important event for the company, but since no money changed hands, it stays out of the official records. And now we get to the end of the sentence, and honestly, the whole point of accounting: interpreting the results. Because creating the reports isn't the finish line. All that work, the recording, the classifying, the summarizing, it's all for nothing without this final step. This is where you look at the numbers and ask, so what? What does this tell us? Are we profitable? Are we in trouble? This is where accounting stops being about the past and starts becoming a tool to shape the future. Okay, we've done it. We've looked at all the individual pieces of the puzzle: the art, the process, the rules, the raw materials, and the final goal. Now, let's snap it all back together and see how it looks. Let's read it one last time, but now with our new understanding. Accounting is the art, using skill and tools, of recording, classifying, summarizing, that's the core three-step process, in a significant manner and in terms of money. Those are the rules of the game: materiality and money measurement. Transactions and events of a financial character, that's our raw material, and interpreting the results thereof, and that's the ultimate goal, turning numbers into actual insight. See, it's not some scary long sentence anymore. It's actually a perfect logical description. So we've seen how accounting gives us this incredibly powerful and structured story about a company's financial health. But that brings us to one last really important question to think about. Since accounting can only speak the language of money, what crucial stories about a company's people, its culture, its creativity, its real long-term potential are being left completely untold?